Bitcoin just smashed its all-time high, and experts are now calling for $150,000, $200,000, even $250,000. But at the same time, huge whales are selling billions, and some are warning of a major dip. Is this the start of a life-changing altcoin season, or is the market about to take a sharp turn? You need to know what's really going on. In the latest video from Altcoin Daily, the main discussion is that Bitcoin is entering a true price discovery phase after breaking its previous all-time highs, with a current price of $123,000 shown on screen. The video pulls together several experts who are extremely positive about what's coming next. The video captures the current high-level excitement in the crypto market really well, focusing on all the positive news converging at once. It's true that the potential for clearer regulation in the U.S., especially with bills like the FIT21 Act gaining some traction, is a significant factor that could bring in more serious investors. The approval of bank custody is also a major step for integrating crypto into the traditional finance system. However, it's my view that while the supply and demand story from the ETFs is powerful, the legislative process in Washington is notoriously slow and subject to change. The market's direction also still seems very tied to wider economic factors like inflation reports in the Federal Reserve's interest rate policies, which can quickly shift sentiment regardless of crypto-specific news. In the latest video from the Crypto Rover channel, the host talks about why Bitcoin recently pulled back. After a strong push upwards, Bitcoin got rejected right at a resistance level of about $122,600 that he had mentioned before. The price dropped back to around $115,000, which he explains was partly to clear out market liquidity and also because a massive whale sold off 18,000 Bitcoin for roughly $2 billion, creating some fear. Despite this dip, he's confident Bitcoin will eventually run much higher and predicts a bull market peak somewhere between $135,000 and $140,000. He also notes that upcoming CPI inflation data will be a key event to watch. The point made about the gap between Ethereum's price and its on-chain activity is really interesting. It seems like the market hasn't fully priced in the network's growth since 2021. This argument is even stronger when you consider the recent Dinkin upgrade, which has made transactions on Layer 2 networks much cheaper. This should, in theory, encourage even more activity and widen that gap between usage and price until the market catches up. As for Bitcoin, the mention of the whale sale is a good reality check. While events like the upcoming halving create a lot of positive buzz, this shows how large single players can still cause significant short-term drops. It's a classic battle between long-term holders taking massive profits and new demand entering the market. In the latest video from Lark Davis, he talks about Bitcoin's recent drop after its amazing run to $123,000. He says there are a few reasons for this pullback. First, inflation data came in a little hotter than expected at 2.7%, which means the Federal Reserve probably won't be cutting interest rates anytime soon. The other big news shaking things up is that a huge long-term Bitcoin holder moved $1 billion worth of Bitcoin. But Lark isn't worried. He explains the holder is selling it through an OTC, over-the-counter, deal with Galaxy Digital. This means the coins are going directly to willing buyers like ETF providers without dumping on the open market and crashing the price. It's interesting how the market reacts to news like a massive whale moving coins. My take is that many people see the headline billion-dollar Bitcoin sale and immediately panic. But the real story is in the details. The fact that it's an OTC sale is a very strong signal. It suggests that institutional demand is so high that they're willing to absorb enormous blocks of Bitcoin without blinking an eye. It's not a sign of weakness. It's a sign of a maturing market with deep-pocketed buyers waiting on the sidelines. The narrative is shifting from retail fear to institutional absorption. Similarly, the corporate race for Ethereum is a fascinating parallel to what MicroStrategy did for Bitcoin. With SharpLink and Bitmine making such aggressive moves, it feels like the corporate treasury playbook is officially expanding to the second largest crypto asset. This could create a significant supply squeeze for ETH down the road if more companies join in. In the latest video from the Ben Cowan channel, he unpacks Ethereum's recent rally to $3,000. He explains that this move comes after his prediction that ETH needed to go home to its support range of around $1,300 to $1,500, which it did. Now, the big question is what happens next? Cowen draws a compelling comparison between Ethereum's current chart and Tesla's price action in 2024. Tesla saw a rally into mid-July, followed by a pullback and then a push to new all-time highs by December. He wonders if ETH might follow this same script, which would mean we could see some weakness or a pullback in late Q3 around August or September. It's interesting to see the focus on historical comparisons like the Tesla chart. While these patterns can be useful, the current environment for Ethereum feels unique. The most significant factor on the horizon is the launch of spot Ether ETFs in the US. This event could introduce a wave of new capital and demand that simply wasn't present in prior cycles or in Tesla's stock chart. The anticipation alone might be what's supporting the price right now. The real story will unfold when we see the actual inflow numbers for these ETFs post-launch. A strong showing could easily overpower the historical tendency for a Q3 pullback, while a disappointing launch could validate the theory that a cool-down period is coming. The market seems to be at a crossroads between following old patterns and forging a new one based on this new financial product. In the latest video from Coin Bureau, Guy takes us back in time to understand the Bretton Woods system, the monetary order that came before our current fiat world. Ever wonder why the US dollar is so dominant? This is where it all started. After the chaos of 2 world wars and the Great Depression, 44 allied nations met in Bretton Woods, New Hampshire in 1944 to create a more stable global economy. The plan they came up with put the US dollar at the very center of everything. It's my view that this history lesson couldn't be more timely. The video does a great job explaining the exorbitant privilege the US gained, and it's fascinating to see how the cracks in that system are reappearing today, just in a different form. We're constantly hearing about de-dollarization in countries like the BRICS nations looking to trade in their own currencies. The core issue, the Triffin dilemma, hasn't really gone away. The world still runs on dollars, but the massive US debt and money printing create a similar sense of instability that existed back in the late 1960s. Instead of a run on gold, we could be looking at a slow, steady move away from the dollar as the sole reserve asset. It really makes you think about how fragile these global financial systems can be. In the latest video from Crypto's Russ, George starts by talking about an exciting day for crypto. Bitcoin shot up to a new all-time high of $122,000 before pulling back a bit, something he predicted would happen to liquidate some long positions. He points out that some of that money is now flowing into altcoins. The biggest thing to watch for now is the CPI report coming out tomorrow. He says if the inflation numbers come in just a little below the expected 0.2% rise, it could be a huge boost for the market. He believes Bitcoin's current rally isn't just speculation like in past cycles, it's driven by continuous buying, and he sees the next stop for Bitcoin being between $130,000 and $150,000. It's interesting that he picked Sway and Say, as both have very strong stories right now. The mini Solana tag for Sway isn't just talk, its total value locked, TVL, has been growing at an impressive rate, showing that real money and activity are moving onto the chain. It consistently ranks high in daily transactions, sometimes even surpassing more established chains. For Say, the planned V2 upgrade is a massive development. Adding EVM compatibility opens the door to the largest pool of developers and applications in crypto. It's a move that could significantly accelerate its growth, much like it did for Avalanche. The stablecoin angle, especially with a state like Wyoming, adds a layer of real-world legitimacy that many projects lack. Both of these projects seem well-positioned with clear catalysts ahead of them. In the latest video from Crypto Casey, she announces that Bitcoin just blasted through a new all-time high of $118,000 and is heading toward $120,000. This move, along with Ethereum breaking the $3,000 barrier, is a strong signal that altcoin season is officially starting. Casey believes we're still in the early stages of what could be the biggest bull cycle in crypto's history, mainly because big institutions and even entire countries are now in the game. She argues this might be the last time we see an opportunity for such massive, life-changing gains before crypto becomes fully mainstream. The video does a great job of capturing the extreme excitement that builds during a crypto bull run. The core logic that institutional money and looser monetary policy from the Fed could send prices soaring is a popular and solid narrative in the current market. The idea of an altcoin season following a strong Bitcoin performance is a well-established pattern that traders watch for. However, the price predictions mentioned are incredibly optimistic. A jump to $160,000 next week would be an unprecedented move, and while crypto is known for its volatility, that kind of surge often comes with a high risk of a sharp correction. The video's focus on using tools to manage emotional trading is a genuinely smart take. The crypto market preys on FOMO and panic, so any strategy that promotes discipline is valuable. The framing of the market as rigged and these tools as the solution is a powerful marketing angle, but it's also a reflection of how many retail investors feel when trading against large, sophisticated firms. In the latest video from DataDash, Paul Sampson explains that Bitcoin has just made history by closing its highest weekly candle ever, pushing well past $112,000 to a new all-time high of $121,500. This move is happening alongside the S&P 500 and NASDAQ, which are also hitting new peaks. A huge part of this rally is the continuous stream of money flowing into spot Bitcoin and Ethereum ETFs, with two recent back-to-back days of billion-dollar inflows. This shows that big institutions are still very interested in buying, even at these prices. It's always compelling when charts show such clean patterns like the cup and handle for the altcoin market. Paul's forecast for a major altcoin rally if the $1.33 trillion level breaks is exciting to think about. From my perspective, though, altcoin performance seems to be increasingly tied to the narrative of the moment. We saw how airdrops and meme coins on one chain can pull all the attention and capital, leaving other solid projects to bleed out. So, while a rising tide in the form of a market-wide breakout would lift all boats, I think the biggest gains will still come from being in the right specific ecosystems at the right time rather than a broad, even rally across all altcoins. The market feels much more fragmented now than it was in past cycles. In the latest video from Crypto Windy, the focus is on Ethereum's recent climb back to $3,000. While it's still a way off from its all-time high, the video points to a report from Berenstein that predicts a long bull market, with Bitcoin potentially reaching $200,000 by late 2025. This sets a hopeful stage for the video's main goal, a $10,000 Ethereum. The points in the video line up well with the two biggest stories surrounding Ethereum right now. First, there's the Dinkin upgrade. The video's mention of scalability issues and the move towards ZK tech is part of this larger effort to make the network cheaper and faster, especially for Layer 2s. This is a real, fundamental improvement that could attract more users and developers. Second, the talk about Cathie Wood and institutional interest is directly tied to the ongoing race for a spot Ethereum ETF. Her firm, ARK Invest, is one of the applicants. The positive sentiment from figures like her and the Bitwise CEO feels like a coordinated effort to build a strong narrative for regulators and big money, much like we saw before the Bitcoin ETFs were approved. It feels like the technical foundation and the institutional marketing are starting to sync up, which could create a very interesting environment for Ethereum in the coming months. In the latest video from The Modern Investor, the host discusses a noticeable shift in the crypto market where optimism seems to be on the rise. He feels that despite a constant stream of massive institutional buying, Bitcoin's price should be much higher, setting a personal target of $250,000 per coin for the market to make sense. The points about Deutsche Bank and Nanolabs are spot on with the current direction of the market. It's not just a far-off idea anymore, it's happening now. For example, just recently, major global bank Standard Chartered launched a spot trading desk for Bitcoin and Ethereum. This isn't a small regional bank, it's a huge international player setting up direct infrastructure. It tells you that institutional demand is becoming a core business consideration. The Nanolabs move to accumulate BNB is especially telling. For years, the corporate treasury story was all about MicroStrategy in Bitcoin. Seeing a company make a billion-dollar bet on an altcoin like Binance Coin shows a real evolution in corporate strategy. It suggests that companies are looking past Bitcoin as just digital gold and are starting to value the ecosystems and utility of other top-tier projects. This really supports the video's idea that we're solidifying a multi-coin future, not a world where Bitcoin is the only asset that matters. In the latest video from the Alex Becker channel, he argues that we're on the edge of a massive altcoin season, and this is the last chance to get in. He believes the whole thing is being kicked off by Ethereum, which is following the same playbook Bitcoin did before its big run. Big players like BlackRock and other institutions have been quietly buying up ETH, keeping the price down. Becker predicts that once Ethereum breaks past $3,500, the altcoin market will go wild. He thinks ETH will eventually hit $5,000 to $6,000. It's interesting to watch this back because a lot of what Alex Becker laid out is actually starting to take shape. His whole theory hinged on big money getting into Ethereum, and shortly after this video was likely filmed, the SEC went ahead and approved the spot Ethereum ETFs. This was a huge step that directly supports his idea of institutional capital flowing into ETH, which he claims is the main trigger for an altcoin rally. His focus on the RWA narrative also seems well-timed, as major players like BlackRock continue to talk openly about the future of tokenizing real-world assets. While he presents it all with his usual chaotic humor, the underlying logic that ETH's success will spill over into the rest of the altcoin market, starting with large caps and moving to smaller, riskier projects, is a classic pattern in crypto. We're seeing some of that choppiness and rotation between narratives right now. It feels less like a guaranteed straight lineup and more like the volatile, wave-like motion he described. In the latest video from the Crypto Jeb channel, Jeb gets right into Bitcoin's huge rally to $123,000 and tries to answer two main questions. Where is the top for this cycle, and is it still a good time to be buying? He believes Bitcoin is heading for a target between $135,000 and $150,000 by the end of September, based on an inverse head and shoulders pattern. The $135,000 price is his conservative case, while $150,000 is his more standard bull case. Jeb's take on the market is pretty much in line with the wider conversation happening right now. The supercycle idea, fueled by the absolutely massive ETF inflows, is a very real debate. The amount of money BlackRock and others are pouring into Bitcoin has certainly changed the dynamics from previous cycles. His caution also seems warranted. No market moves in a straight line forever, and the recent price action has been almost vertical. A pullback isn't just possible, it's healthy for a sustainable trend. The strategy of stacking cash near what could be a local top is a classic risk management move. The true test, as he points out, will be what happens during that next big correction. If buyers defend the $100,000 to $112,000 zone with force, it would be a strong signal that this cycle is indeed different.